All right, what's going on, class? Today we're discussing swing trading. Ooh! No, so I wanted to talk about swing trading a little bit. As you all know, I'm a swing trading maniac, and it's just one of those things that I love to do. Look at only 30% of my portfolio is specifically set for swing trading. I only use 5 ETFs for my swing trading strategy, and it's very simple. There's nothing complex about it. Now, I want to make sure that you're aware. This is not day trading. I repeat, this is not day trading. If you want day trading, go find some schemer, okay? My swing trading strategy relies on what's called trickle buy-in, trickle sell out. Those are the two most important parts of my swing trading strategy, is that I trickle buy and I trickle sell, and I'll explain those a little bit further. Another thing I want to say is I buy the dip and I sell. So I buy when it goes down and I sell when it goes up for a profit. Like I said, I get in a little bit here, a little bit there, and I get out a little bit here, and I get out a little bit there. Got it? And I'll even explain it on a whiteboard here pretty soon, on a virtual whiteboard. Actually, there was a specific whiteboard tool that I wanted to use. Oh, where was it? Hold on. It's not Lucid. I think this is it. Free online whiteboard. Oh, this is actually different, but I'll bookmark this anyway. Yeah, so I'll explain a little bit throughout the show. You'll have to forgive me. I got a little bit of a headache today. Probably a little bit of allergies. Give me one moment, everybody. We got Eric Von Eric in the house. What's up, Brony? They say that rock shit doesn't rock anymore. Oh, yeah, that's right. Hold on. Give me 1 second, folks. I'm changing the game one step at a time. Changing the game so much it might as well be a crime. They say that rock shit doesn't rock anymore. They say the whole game went pop, so we back in this hole. Give me one more moment, everybody. Still getting things set up for the class. Okay, so we're back. So now we're on onlinewhiteboard.org. I'm going to display a couple things. Now, overall, we're going to talk about swing trading, all right? Let's use the calligraphy pen. No, we don't need calligraphy. Eraser. We'll just use the pen. We'll just use the standard pen. Okay. So this is Michael Garza's swing. Oh, God. You know what? I think, hold on. We're just going to use text. We'll draw things that we need to draw, but this is terrible. What the hell? They say that rock shit doesn't rock anymore. They say the whole game went pop, so we back in this hoe. I just don't know where the eraser is. Do I do undo, 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 undo? Okay. Okay. Whatever. Fuck it. Here we go. So we'll add text. Okay. Garza's swing trading guide to being a brony. Okay. Okay, so now you're probably wondering, why are we doing this? I'm going to do sticky notes. We're going to sticky notes because sticky notes are fun. Now, one of the first principles, I have an equation. Okay, I have an equation to how I swing trade, okay? It is intrinsic value plus, this determines what I'm swing trading, by the way. This equation determines what I will swing trade and what I will not swing trade. But more importantly, it's what I will swing trade. So, does the vessel that I'm swing trading have intrinsic value? Good. Does the... Let's see. Give me a few seconds, guys. So... Oh, hey, I want to add more to this fucking sticky note, bro. What the fuck? Ugh. This thing's pissing me off, bro. Annie said in here, I thought I was done with school. Yeah, this is a pretty simple formula, though. So when I'm swing trading, first off, I like to make sure I got a lot of cash on the side in my brokerage account. That's really important. You want to have a pretty good chunk of cash sitting to the side to deploy at any time. That's another fun fact. I'll put that down on the board here in a second. But I'm a little bit pissed. It's not letting me edit. Okay, here we go. Intrinsic value plus... I'm forgetting my own equation. Oh, plus diversification plus volatility plus liquidity. Now, you're probably thinking to yourself, okay, so the equation's intrinsic value, diversification, volatility, and liquidity. That's fantabulous. But how do I use this information? How do I translate this weird equation? And let's put an equals on there. Equals swing trading success. This is my opinion. This is not fact. This is my experience. This is what's worked for me. I've always had to gauge the things that I've had to gauge this way. Okay. Now, what does that equal to? That equals, I'm going to draw a big equal sign here. It looks like shit. This equation right here, what does it translate to? What does it actually equal? Well, let's put another sticky note in. This is my first time using this program, by the way, so I think I'm doing all right. So, What does this actually equal? It equals ETFs. That's what it equals. And I'm going to explain which equals exchange traded funds. Now, you're probably wondering, where do I find exchange traded funds? So I know the equation. I know that I need intrinsic value, diversification, volatility, and liquidity. But how can I get all of those into one? Well, you could get all of those specific qualities in ETFs. Now, exchange traded funds can be any number of things. It could be a basket of stocks. It could be something that profits on the inverse of what something does. For example, I got what's called the BITI ETF, the BITI. And that profits from the downfall of Bitcoin. So when the price of Bitcoin goes down 2% in the day, the BITI goes up 2% in the day. And conversely, if Bitcoin goes up 2% in a day, BITI goes down 2% in a day. So it does the inverse of whatever Bitcoin's doing. Now, this is an exclusive. This is exclusive for the show. By the way, none of this is financial advice. I just want to repeat that. Not financial advice. In fact, let me write that in big, sexy text. Not financial advice. There we go. Just so that way we're clear. So that way we're on the same page. All right. So, this is the equation that I use to figure out what ETFs I want to buy. Now you're probably wondering, Mike, what ETFs do you use? And that's a good question. So I figure I'm just going to let you know what I do. And if you guys want to do it, talk to your financial advisor, because this is not financial advice. But talk to your freaking financial advisor. So, let me get this out real quick. What ETFs does Garza use? Well, let's explain. So the ETFs that I use specifically are the VSS. And I'm going to translate those ticker symbols here in a second. But yeah, I'll translate these here in just a second, you guys. Hold on. Hopefully you guys are enjoying this. I decided to take a break from politics, and I was like, I'm just so done with politics. It's a zero-sum game. Even though I enjoy reacting to a lot of the content out there, and I do enjoy the fact that I get a lot of subscribers from it, it's not always worth it to me. So, you're probably wondering, what sort of ETFs do I own? I own the VSS. The VTWO. The IAU, SLV, and the BITI. Now, so this is the question. You know, what ETFs does Garza use to swing trade? And below, and I'm going to actually, you guys, I don't know how well you guys could even see the text, to be quite honest. So I'll just assume that you guys can see it. Give me a second here. This is the Vanguard. It's actually, so basically this is small cap international. VTWO is the Russell 2000 small caps, equals gold. So the IAU is a gold fund. SLV is a silver fund. Biddy is basically inverse of Bitcoin fund. I won't explain how the underlying products work. I will say this. Oh, Annie says I typed advise, not advice. Hold on. Thank you, Annie, for the correction. Oh, I duplicated that. Hold on. Duplicated bad spelling. Here we go. Everybody give a shout out to Annie. She actually did catch a spelling error on my end, which is totally my bad. I typed advise when I should have typed in advice. There we go. Advice, not advise. My bad. Not financial advice. My bad. Okay. So you guys are probably wondering, what ETFs does Garza use? Does Garza swing trade? So, and you're probably wondering, why? Why do I do it? So I'm going to put, why do I swing trade these ETFs? It's a pretty good question. It's a very good question. One of the main reasons I do is because they fit my equation. At least for the most part, they fit my equation. They don't perfectly fit the equation, oddly enough. Oh, wait, what happened? Anyway, I'm just going to write this down. So why do I swing trade these products? Okay, how about this? I'm just going to explain why I swing trade ETFs. So the main reason that I swing trade these 5 ETFs is because they fit the bill for what I want to do. The one core component, believe it or not, even though I listed it as the third value in the equation, is volatility. I like the Biddy because it's volatile, and I do believe that the Bitcoin lacks intrinsic value. So because Bitcoin lacks intrinsic value, it is okay for me to have Biddy as one of my swing trading vessels. The SLV. Now, you're probably wondering, why do you have the SLV and the IAU, the gold fund and the silver fund? Why are those swing traded? Why are you swing trading those, Garza? There's no diversification in gold and silver. So why would you swing trade these? So it's a bit of a hypocrisy. I'll admit it. But they do fit the 2 core criteria for me. Intrinsic value, volatility, and liquidity. Now, do gold and silver fit the diversification build? They do not. There is always going to be some level of hypocrisy or contradiction in some of the things I do. I'm going to admit that right here, right now. And none of these are like firm rules. But it is good to try to have at least 3 of the 4 pieces of criteria available in the equation that equals the ETF. So let's look at Biddy, for instance. Does Biddy fit the criteria? So does Biddy have intrinsic value? Yes and no. I'll tell you why yes, though. Biddy is basically betting against something that lacks intrinsic value. Therefore, in theory, I mean, this is kind of more of a philosophical thing right here. So if the Biddy is betting against something that lacks intrinsic value, does that in itself allow the Biddy to have intrinsic value? One could argue yes, that betting against something that is a Ponzi scheme and lacks intrinsic value could give that product, like the Biddy, intrinsic value. In theory. Because you're betting against an intrinsicless product. Does that make sense? I hope it does. So yeah, I'm going to type this in. Not every stock, not every ETF is going to fit the equation perfectly. So, and this is one of the reasons why I don't swing trade one ETF. I want massive levels of exposure. So that's why I swing trade 5 ETFs that you could say are not necessarily exactly correlated with each other. Right? Not every ETF is going to fit this perfectly. Samuel Westall, what up, dude? We got Samuel Westall in the house, dude. I love Sam Westall. He's pretty sexy. Everybody give a round of applause to Samuel Westall, everybody. Let's go, dude. Annie says, bronies, we are in class. We don't want to get reprimanded. Yeah, that's... Gryffindor just lost 20 points. Hufflepuff lost 20 points as well. All you guys lost your points. You're all losing. All you brony bros. You lost the game. You lost it. But yeah, no, overall, that's just pretty much the Garza swing trade equation. But yeah, no, so overall, like I said, the ones that I have, and by the way, there are more ETFs out there than the ones that I have laid out here. You don't have to do exactly what I'm doing. You could do whatever. If you want to be a swing trader, not financial advice, by the way, if this is for educational entertainment purposes only, talk to a financial advisor. But if you want to swing trade, I will say my equation is, I do love using this equation to figure out why I love using this equation because it allows me to figure out if I should swing trade this ETF or not, right? So, like I said, with the biddy has intrinsic value because it's betting against something that lacks intrinsic value, right? And then, now is the biddy diversified? Now you got to ask yourself the question, does biddy have diversification? No, it does not. It does not at all. However, I bought into Bitcoin really early. And I haven't sold my Bitcoin, even though I think Bitcoin's completely worthless. And the reason I do that is so I can hedge. Now, there are times where if something lacks diversification, you can replace the diversification part of the equation with hedge. Are you hedging as well? Hedging is important too. So when I say hedging, I mean, do you have the underlying product that you're betting against? So Annie's wondering, what's the biddy? I'm new. Okay, so the biddy, the BITI is basically it's an inverse of Bitcoin. So it's basically an ETF that allows you to bet against Bitcoin. So for example, if Bitcoin, let's just say Bitcoin goes up 5% in a day. What's the biddy going to do? The biddy's going to go down 5% in a day. Let's say Bitcoin goes down 5% in a day. The biddy's going to go up 5% a day. So what it does is the biddy mirrors Bitcoin, but it mirrors it in the inverse opposite direction. So it goes in the opposite direction, basically. It goes in the inverse. So does that make sense? So it allows me to basically profit. So biddy allows me to profit off the downfall of Bitcoin if the price goes down. However, I end up losing value on the biddy if Bitcoin goes up, which isn't a bad thing, by the way, because I like buying the biddy on the dip, so I'm not against it, because I do firmly believe in my thesis that Bitcoin is a Ponzi scheme. So because I believe that Bitcoin is a Ponzi scheme, I want to have biddy as a swing trading vessel, because I could swing trade the volatile nature of Bitcoin, because Bitcoin will go up, but it'll go up rapidly, but it'll also go down just as rapidly, mainly because it lacks intrinsic value, and mainly because everybody's gambling when they get into crypto. Bitcoin is not the future of money. I hate to break it to all you Bitcoin bros out there, but Bitcoin is not the future of money. I know it's a sad reality for you guys to swallow. I get it. But it's true. Bitcoin is not the future of money, man. It just isn't. It just isn't. So yeah. So as you can see, VSS. Now let's stop focusing on the biddy though. Any questions on the biddy before we move on? I would say that Bitcoin goes down more rapidly than it goes up. Yeah, Bitcoin is absolutely a Ponzi. No, Bitcoin is absolutely 100% a Ponzi scheme, in my opinion. So, does anybody have any questions about the biddy before we move on to the next ETF that we're going to look into? These are just examples. These are not just examples. These are ones that I use on my day-to-day. Not financial advice. It is your choice to use these if you choose to use these. I want to put a quick note. It is important to keep a good amount of cash sitting in your brokerage. I'm going to actually sitting in your brokerage to buy the various dips. Let's go that route. Okay. Well, we'll put this right around here. So, yeah, like I said, it is important to keep a good amount of cash sitting in your brokerage to buy the various dips that may happen with these various ETFs. If you chose to use these 5 ETFs as swing trading vessels. Oh, yeah, no, I'm just, by the way, I think that I want to just let you guys know, full transparency. And let me pull out this real quick. 30%, and I want this to be clear, of my portfolio is 5 ETFs that are swing traded. It's probably going to drag off the screen a little bit. Hold on. Right? Let's put this over here a little. All right. I edit this. Now, 70%. Oh, I gotta look for the percentage side. 70% of my portfolio is highly diversified and held long term. All right? I want that to be very, very clear. I'm going to try to fit that in here somewhere. Okay. So, yeah, I'm going to repeat this real quick. So, 30% of my portfolio is 5 ETFs that are swing traded, right? These 5 ETFs that I'm talking about only take up 30% of my portfolio. Got it? 70% of my portfolio is highly diversified and held for the long term. I've got a variety of ETFs that are long term. But yeah, no. Still, I keep, like I said, I keep 30% of my portfolio in 5 ETFs that are swing traded. And the reason I love these ETFs is 1, they're volatile. 2, they have intrinsic value. 3, there's a lot of liquidity. And I'm going to explain liquidity real quick in a simple way. Liquidity means that a lot of people get in and out of it. There's a lot of people buying in. There's a lot of traffic, basically. Think of liquidity as traffic, right? So when I'm trading the VTWO, there are a lot of people getting into it, and there's a lot of people getting out of it. There's any number of people that are going in and out, in and out, in and out, in and out. That means there's a lot of traffic. That means there's a lot of people I could sell to. There's a lot of people I could sell to, and there's a lot of people I could buy from. Obviously, I don't know who I'm selling to, and I don't know who I'm buying from, right? All I know is I'm buying it at the fair market value, at the fair market price, whatever that may be. And that's about it. It's as simple as that. But yeah, so liquidity, all of these have liquidity. Well, I don't know about the biddy. I'm pretty sure the biddy's got decent liquidity. I haven't really looked into that as much as I probably should have. But the biddy at least has volatility and intrinsic value. What the biddy lacks in diversification it is increased by the fact that I'm betting against a Ponzi scheme. Right? Now, let's focus on silver and gold. Silver and gold, actually, there's no diversification in these funds. It's just, it contains the IAU, this gold fund, the IAU, holds gold bullion. The fund itself actually has gold bullion to back up the fund. So that's why the spot price is always accurate. So I could swing trade this particular ETF at any time because of the fact that it holds actual gold and silver bullion. So the silver fund holds silver bullion, and the gold fund holds gold bullion, right? So I'm able to swing trade the price of gold and the price of silver through those ETFs. Now, you're probably wondering, well, is gold really volatile? You're right. Gold is actually not that volatile. In fact, if anything, gold actually, and this is one of the reasons why I kind of question having the IAU as one of the swing trading vessels. But at the same time, I think about it this way too. Having gold in my portfolio allows me kind of a counterbalance with all these ETFs that I'm swing trading. It kind of allows a little bit of protection to some degree. Because I will admit, gold is fairly stable. Now, gold can go up and down very rapidly depending on what's happening in markets and what's happening in the world. So that's a big deal. Yeah, so it matters. It matters a lot. ET says, "What up, Garza? I dig the not financial advice. I like gold. Gold." But yeah, no. So one of the reasons I have silver, I swing trade silver quite a bit, and the reason I swing trade silver a lot, you want to know why? Anybody care to know why? Why does Zaddy swing trade silver? Any guesses? Because it's super volatile, dude. Also, silver and gold, they have intrinsic value. Now, gold is not volatile, but the price of silver, man, is so fucking volatile. I love it. When silver goes down, it goes down rapidly, but I love buying the dip on silver. This is why I keep a lot of cash. And like I said, let's harp back to the fact that it is important to keep a good amount of cash sitting in your brokerage to buy the various dips that may exist. Very, very important. Like, I can't emphasize that enough, that buying the dip is very important. Yeah, I buy the dip all the time. Mark Salmons, what's up, dude? We got Mark Salmons chilling out. We got our boy, dude. Shaboy. But yeah, no, overall, I would say, yeah, so IAU, the gold fund, I mean, really at the end of the day, the IAU is just like, you're just getting exposure to gold, and you're able to swing trade the price of gold. With the SLV, you're getting exposure to silver, and you're able to swing trade the price of silver, essentially. That's pretty much it. It's as simple as that. It's nothing too crazy. I love the IAU. I love the SLV. Both very brilliant. But yeah, no, overall, and then let's focus on the other ETFs that are in my portfolio. Now, the other ones are the VTWO and the VSS. Now, let's focus one at a time. The VSS is small cap international stocks. Now, why would I have this ETF as a swing traded ETF? Well, one, let me go over the statistics. Now, these two, by the way, the VTWO and the VSS, actually fit the equation to a T. Every single requirement is there. Every single part of the equation, 4 out of 4. It fits 4 out of 4, all right? Let me just explain to you guys real quick. Okay, so the VSS is the Vanguard FTSE, all world, excluding U.S. small cap ETF. Now, does it have intrinsic value? Yes, and I'm going to explain why. The reason that this has intrinsic value is it has 4,849 individual holdings. That's pretty impressive. And what it contains is it contains foreign, small, and mid-cap companies. It's pretty important. Pretty important. Okay. So now, does it have diversification? Yes, it does. Oh, I already explained that, yeah. So it has diversification, and it has intrinsic value. Now, why does it have intrinsic value? Well, it holds a lot of companies that are actual companies that actually produce, they provide a service, they produce a product, they do something. They're productive assets. So yes, these productive assets within this ETF, they all have intrinsic value to some degree. Now, diversification, well, I just explained that there's over 4,849 companies that this fund, that this ETF, this exchange-traded fund, holds these companies within it. So you're getting the exposure to all those various companies. And you don't even have to buy all the companies to get the exposure. Does that make sense? Okay. Now, we got volatility, right? So does this have volatility? Yes, it does. It absolutely does. Because it holds a bunch of small cap ETFs, right? And what are small cap companies known for? They're known for their violent price fluctuations. So good. We got volatility. That's fantabulous. What about liquidity? Are people getting in and out of this very rapidly? Yes, they are. This is a very, I wouldn't say it's the most popular fund in the world, but there is volume. There is actual trading volume in this. So it's perfect for swing tradability. Oh, okay. Gotta pop my back. Hold on. Oh. But yeah, no. So the VSS fits every single criteria of the equation itself. So it is, in my opinion, one of the, because it's got the volatility, because it's all small caps in there. It's got the diversification. It's got like 4,800 freaking holdings. It has intrinsic value because every single company within that ETF does something. It is something. ET says, this looks crazy, brother. No lie. Well, I know. I did this. Honestly, I made this on the stack of a whim, dude. I made this on a whim. All right. I didn't really plan this out. All I know is I knew what my equation was. I know how I swing trade. I know from my experience. And so I was able to garner this all up through experience alone. Now, we have the VTWO, the Russell 2000 small caps. Spicy. Now, why is the Russell 2000 small cap one? Why does that fit the entire equation to a T? How does that fit the entire equation? Is what you're asking. Well, does it have intrinsic value? Yes. The companies it holds are actual companies. They do something. They have assets. They create products. They provide services. Blah blah blah. So yes, by default, it has intrinsic value. 2, is it diversified? Does it have diversification? Yes, it does. It holds 1,963 companies. Once again, 1,963 companies are held within the VTWO fund itself. Okay? Beautiful. So that's the second criteria has been met. The third criteria, volatility. Now, is the VTWO volatile? Yes, because it contains small cap companies that the Russell 2000 tracks. It's the Russell 2000 index, basically. So yes, it is a very volatile product. It goes down violently and it goes up violently. Now, does it go down massively? No. Does it go up massively? No, but it does go up and down enough for it to be considered volatile for my equation to work. Now, it's met 3 out of the 4 criteria. Does it meet the 4th? Liquidity. Well, yes, it does. There's a lot of people that get in and out of it, so that's great. Brilliant. And that's it. These are the 5 ETFs that I swing trade. Now, the VSS and the VTWO meet all 4 criteria for the equation. The IAU and the SLV, they only technically meet, I would say, volatility for the IAU. It's volatile enough for it to be considered in the volatility. So I would say the IAU and the SLV only meet 3 out of the 4 criteria. The only criteria they don't meet is diversification. They're technically not diversified because they're all exposed to one single commodity class. And then the biddy. So then we have the final product, the biddy. Now, how much of the biddy met the equation? Well, it does have intrinsic value because it's betting against something that lacks intrinsic value. Is it diversified? No. It's betting against a single product, so it's not diversified. Is it volatile? Yes, it is. It absolutely is. Now, does it have liquidity? Yes, it does. I believe people get in and out of the biddy fairly often. So, why? Now, you're probably asking yourself, well, why would you keep those 3 ETFs if they don't fit your equation to the T? Because to be honest, the equation is more of a guideline than it is a strict rule, right? You could still have swing trading success. Do you want to know why I put intrinsic value at the beginning of the equation? Because I prioritize what is most important. Now, you're probably wondering, well, why would you put diversification does matter, by the way. Diversification does matter if you can get it. But yeah, intrinsic value is probably the most important aspect of this equation. Does the thing that I'm swing trading, does it actually have intrinsic value? And if the answer is yes, we can move on. If the thing that I'm swing trading doesn't have intrinsic value, then I'm not going to swing trade it anymore. The products that I am swing trading must have intrinsic value. Period. End of story. They must have intrinsic value. Straight up. It is extremely important. But yeah, as long as the underlying product has intrinsic value. Silver, gold, the biddy, because the biddy's betting against something that lacks intrinsic value. Therefore, you could argue that the biddy has intrinsic value because it's betting against something that lacks intrinsic value. That's all I'm saying, bro. But yeah, no, I really do enjoy figuring out what has intrinsic value, what doesn't, what works, what doesn't work. I mean, those are important things to me, man. Those are very important things to me. And no, I think that, with those equations that I was talking about, um, no, the reason that they work, the reason that my equations work is, first off, I have the success, I have the proof of profit. Honestly, profit is an indicator that I'm successful. If I'm profiting off of these swing trades, I'm successful. Now, you're probably wondering, well, why don't I day trade instead of swing trade? Well, I need time. These products are not going to go magically up in one single day. Sometimes it takes a week, sometimes it takes a couple days, sometimes it takes 2 weeks. Rare occasions a month. Samuel Westall is killing it, man. Samuel Westall Incorporated Limited has intrinsic value. Just saying that. Samuel Westall, I don't doubt you, brother. I don't doubt you, man. But yeah. Overall, it feels good to share that with you guys. I wanted to share that with everybody in a live stream, considering I'm not going to be live streaming that much today. I don't even know if I'm going to live stream at any point today, to be honest. So I may not. It depends. But I'm excited, man. I love sharing this stuff with you guys. Like you guys are so fun to share this stuff with. And I never know how much this is going to help a lot. If this is going to help anybody out. Just remember, talk to a financial advisor. Feel free to, by the way, talk to a financial advisor. Feel free to let them know my equation, because they might be able to use the equation for their own clients, man. The reason I give away this information for free is just because I really enjoy teaching. And I feel, honestly, it's the least I could do. You guys have been so incredible. Annie, you've been incredible. Sam, you've been incredible. A lot of you guys have been awesome. ET, you've been funny as shit, dude. You're one of the funniest dudes anytime you come on the channel. Yeah, so I wanted to impart some really good advice. Not advice, sorry. None of this, not financial advice. I wanted to impart... educate. I want to educate. And I love to educate and teach. I love to... one of my things is... my brain is not working today, you guys. I'm sorry. But yeah, it's not financial advice. It's just for entertainment and educational purposes only. But the reason I love to entertain and teach is because, honestly, I enjoy helping people out. I really do. I really do. Yes, I called you funny, E.T. You're a funny man. But no, I really do enjoy helping people out to every degree, I think there's a lot of people who could be able to benefit from this. I will say this. I will say this, though. But no, overall, the best thing one could do is invest. I believe in long-term investing. Just remember, this is only 30% of my portfolio. Those 5 ETFs that I just mentioned are only 30% of the portfolio overall. And that's it. That's all they are. Period. End of story, man. Hell yeah. Anyway, hold on. Thank you, Samuel Westall. Appreciate it, brother. Hell yeah, man. ET says, get rich or die trying. Exactly. Exactamundo, baby. Mm. Oh, yeah. But yeah, what do you guys think? Do you guys have any questions about my swing trading methodology? Any confusion? I mean, it's a new process, and feel free to ask any question, even if it seems a little. I mean, there are dumb questions in this life, but I'm not gonna make you feel bad about it. Hello.
What you doing?
Oh, just live streaming, and then I'm gonna hang out with my girl on lunch for a bit.
I was gonna see if you were trying to maybe hoop up, but you're good.
Oh, you good, brother? Yeah, I'm gonna be
Busy.
I'm gonna be pretty busy today because after lunchtime I got some stuffs I gotta take care of, and then I gotta head out a little bit. But yeah, I won't be able to ball today, unfortunately, or tomorrow because I'm gonna be busy helping Byron and my mom and stuff like that with some yard work and shit.
Not a good deal. Yeah, I was just asking today for a little bit, but you're good.
Yeah, I'm sorry, bro. You might be able to get loose sanity though.
Yes, sir. You're good. Yeah, tomorrow I think we're gonna meet Lewis, Shade, and Trey. We're gonna raft them.
Oh, where at?
Rogue River.
Rogue River. Holy crap, man. Hell yeah.
The Roguester.
Dude, hell yeah, brother. Fuck yeah.
Yes, sir. Yes, sir.
All right, man. Well, I'll catch you later, brother. Yeah, because I'm gonna be also going to the Umpqua for a bit tomorrow, so that's gonna be cool.
Yeah.
It's gonna be.
Enjoy it, man.
Oh yeah. Well, hey, have fun, brother. Get those brewskis on and tell Chich he's the man and LeBron sexual. All right, brother. All right, I'll let you go, man. Have a fun one.
Thank you.
Bye. That was Antoine, everybody. It's our boy Antoine. Total stud. All right. But yeah, anybody got any questions though about I'm gonna have to. All right. Everybody in class, you're getting mandatory spankings. Not because you did anything wrong, but because Chris Hansen's always after me. All right. So no, just kidding. But no, you guys are getting spankings, all of you. But yeah, any questions though? Does anybody have any questions on any confusion? If there's, because I'm not gonna lie, I was kind of all over the place with my explanations, and I want to make sure people understand what I'm trying to convey, right? So I want to make sure you guys are getting it. Hopefully, if you guys are not getting it, please let me know. Some of these topics are a little confusing and a little bit foreign to a lot of people. And like I said, only 30% of my portfolio contains these 5 ETFs that I swing trade. It's not like I'm swing trading these all day long in a juicy man thong, you know? But yeah, no. ET says you didn't even mention Tilray. Tilray's actually a decent. I have some exposure to Tilray in my portfolio because I do like having I do like having what's called a speculative sleeve in my portfolio. That's something I'm really all about at the end of the day. So yeah, I think most people should have a speculative sleeve in their portfolio. In my opinion, that's just opinion. It's not financial fact or anything like that. Just a simple opinion. But yeah, no, I always have a speculative sleeve in the old portfolio. I gotta check something real quick. Speaking of portfolio, I'm checking mine real quick. Yeah, like for example, the VSS and the VTWO, they're both up like crazy right now, and then the Biddy is up. Oh my god. Oh, Bitty, my titty. I might sell a little bit of Biddy. I mean, I'm only selling at a profit at this point. I'm playing with house money, baby. Yeah, I'll sell a share. Why not? Because here's the thing: if Bitcoin goes up on a crazy bull run, you never know when it will. I mean, it could do it at any time. Even though I think Bitcoin is completely worthless, hell, I know it's worthless. It's one of those things that you should always consider buying to bet against Bitcoin. I love betting against Bitcoin, man. There's just so much opportunity in betting against Bitcoin. I can't help myself, dude. And I can't help myself. Ooh, ooh. But yeah, no, I swing trade probably a little more than I should. I don't know. I love swing trading. It's kind of an art in my opinion. I do find swing trading to be a bit of an art more than anything. I tend to have a very good time with it overall. And I'm surprised more people don't swing trade, you know? And, granted, I understand people. I see either long-term investors completely or like day traders. There's like never an in between. I don't even think people realize that you can swing trade your positions. You don't have to day trade. Day trading is not a requirement. If anything, I think day trading is a bad idea. Straight up. I do. I think day trading is probably one of the most irresponsible bad ideas out there. Day trading sucks, dude. Swing trading, I think having 70% of your portfolio as a long-term holdings, as long-term holdings, and then 30% of your portfolio as swing traded products. Sorry, I can't think. Hold on. So, having 70% of your portfolio as long-term holdings is really intelligent. Having 30% of the portfolio as specifically swing traded, like 5 ETFs specifically, or less or more, however you want to do it, along with a lot of cash on the side. The important thing is you want to keep enough cash on the side to be able to you want to keep enough cash on the side to be able to deploy at any time when the ETFs that you have dip. Because remember, the reason that you're getting into these is 1, intrinsic value, 2, diversification, 3, volatility, and 4, liquidity. If it meets 3 out of the 4 criteria, intrinsic value is a must though. It has to have intrinsic value, or else it's not worth it. If the underlying product that you're swing trading doesn't have intrinsic value, it's not worth it. That's why I tell people swing trading Bitcoin is a zero-sum game. Because there's nothing stopping Bitcoin from going to a market capitalization of 0. There isn't. Because it is intrinsically worthless. And if anything is intrinsically worthless, then it's then it's a Ponzi scheme, basically. And that's the way I look at it. But yeah, no, I'm a huge fan of today is not my day. But yeah, no, I mean, look, I'm a huge fan of exchange traded funds. I really believe that, I mean, you can have huge advantages just owning good exchange traded funds. Like, and when I say owning, I mean swing trading specifically. But also, look at 30% of my portfolio may be these 5 ETFs, but 70% of my portfolio is extremely hyper diversified. I have ETFs. I have like one share of every ETF that I particularly like. Oh, thank you, Annie. I appreciate the gold coins. Everybody give a shout out to Annie for the gold coins. Mucho apreciado. Very much appreciated. But yeah, for the most part, like my main, what do you call it? Oh. So like I said, 70% of my portfolio is long-term, very, very spaced out, very spread out. I got like, God, I've got like, I want to say I've got close to almost 100 individual ETFs, I think, that I own. Well, I wouldn't say that. Hold on. I got probably about 50 individual. I got 50 ETFs that I own. I've got several individual stocks that I own. I own like one share of everything that I want, and then yeah. So it's high. My long-term holdings are heavily diversified. I am basically an index fund within itself. My portfolio is basically a mixture between index fund overall and swing trade, and swing trading 5 specific ETFs. I need more caffeine, man. Oh. But what do you guys think, though? Any questions? Like I said, is anything confusing? It's okay to admit if anything's confusing, too, by the way. Yeah, and like I said, if anything doesn't make sense, like I said, here's the equation. Let's go back to the equation real quick. What the fuck? But yeah, here's the equation. Just I'm blowing it up on the screen real quick. So like I said, the equation's pretty simple. It's just intrinsic value plus diversification plus volatility plus liquidity. You know, it equals swing trading success. And like I said, I want to edit this a little bit. Must. So intrinsic value must be included. The underlying ETF must have intrinsic value for this equation to succeed. If the underlying product does not have intrinsic value, then the equation does not succeed. Period. End of story. The equation will never succeed fully if the underlying product does not have intrinsic value. It must. It must be valuable. You must take away the market data You got to look at the product as a pure product, okay? Is the product actually valuable? That's the whole question. That's the important part of the question. My dad's saying wieners, big boobs, invest in boobs, don't fear the boob. I'm confused about my gender. Say it. Big boobs or away. Look, Dad, nobody wants to... first off, I just want to go on a rant real quick. I am not a fan of fake tits. Like, seriously, I'm not a fan. I don't understand, like, why people, like... You know how, like, women in L.A. or whatever get fake jugs all the time? Like, porn stars get all these fake boobs? Like, why? You know, men don't actually want, like, if like women think that men want fake tits. No, men want real tits or none at all. Right? Like, if you're like relatively flat chested, that's okay. But like, I think most men would prefer flat chested. If you gave a man a choice, most men would like give a man a choice, right? Does the man want fake boobs or does he want flat chest? This man only has two options, right? I'm pretty sure most men would be like, well, fake boobs are kind of gay, so I'm going to choose flat chest, right? Because fake boobs are fake. They're not real, so it's kind of like it's an illusion, right? You know what I mean? They're not natural. They're artificial. So it's like you would want to go with flat chest. Flatter. If you had the choice between flat chest or fake boobs, choose the flat chest. Just saying. That's my argument. I think fake boobs are kind of gay. I'm just not a fan of fake tits. All right, I don't get it. I don't get it. I don't understand the world of fake boobs. I don't get it. But, you know, whatever. Whatever. I don't understand the world of fake titties. Tiny Lion Gaming says, I totally agree. Now, look, if you got fake tits, I'm not shaming anybody. I'm not shaming anybody who's got fake boobs. Okay? No shames. What I am saying is most men don't want fake boobs. I think I would like to believe that most men don't actually want a woman with fake tits. I believe that. I don't think most men want that. That's why I say fake tits are gay, dude. I'm not about that life, bro. Say no to fake boobs, dude. Say no to fake boobs. Anyway. So yeah, no, like I said, 70% of my portfolio is heavily diversified. I've got like hundreds of different positions that are my long-term holdings in my portfolio. Like, dude, I got Coca-Cola. I got, God, what else? I could give you an entire list of my holdings. I've got so many various holdings in so many different companies, it would blow your guys' mind. I own at least one share of several different ETFs. Like, for instance, Coca-Cola. I own National Health Investors, that's a REIT. WP Carey, that's a real estate investment trust. iShares Core Dividend Growth ETF. Altria Group. Centerspace. iShares Core US REIT ETF. State Street SDR, SPDR, S&P Bank ETF. Realty Income. BXP. EPR, these are a lot of REITs, by the way. I will say that my individual holdings, when it comes to individual stocks, I do own a lot of different real estate investment trusts. I'm not going to lie. I'm very, very spread out in the world of real estate investment trusts. But I also do have a lot of various long-term holding ETFs that that are index ETFs. So Best Buy, I actually got Best Buy on the dip, by the way. Best Buy, actually, I got to admit, Best Buy is still a good retailer. My only problem with Best Buy that I really have ultimately is I feel that I'm not damn it, I'm not going to listen to my dad on anything. Let's see here. My dad's just telling me to invest in boobs. Look, I got double D's. I got nice double D tits, okay? Look at these. I got big boobs, okay? I'm good. So we got Best Buy. So these are all my positions. I own at least one or more shares in each of these positions. And I typically just own one share of all these because I want to remain as diversified as possible. And I'm very secure in owning just like one share. I don't need to own like... Everybody tells me, it's like, Mike, you're way too diversified. You're way too spread. No, it doesn't matter. I am going to stay diversified because that's the smartest thing to do. You want to spread out your risk as much as possible, and that's the key. I would rather be diversified than too concentrated in my positions. I don't want to be concentrated in any specific position. I think that's a bad idea. I think it's a bad call. I think you're screwing yourself over if your portfolio is too concentrated in very few positions. I think it's a bad move, dude. Bad, Brad. We need my boy Brad back, dude. We need Brad back on the channel, dude. But no, do you guys think that Michael Garza should get fake boobs? Do you guys think I should get fake tits? I think that's the question that every brony on this channel is really asking. Should Michael Garza get fake boobs? I should. No, just kidding. No, but 30% of my portfolio is 5 ETFs. And that's it. And I basically own multiple shares of each of these ETFs, right? I own multiple shares of each of these ETFs. So concentrating it down, I'm golden. I'm a golden boy, man. I love the 30% of my portfolio that is swing traded. It's my favorite part because the irony is I make a lot of income from the swing trading portion of it. So you're probably asking yourself, Michael, if you make so much income from swing trading, why not just make your entire portfolio swing traded? Why not just swing trade your entire portfolio? And that's a good question. It really is a good question. I think swing trading my entire portfolio would be doable for income. Should I do it? No, I don't think so. Look, there's a reason that I believe that time in the market beats timing the market. So you're probably thinking, well, why not try to time the market? I honestly think it's impossible to time the market. I could be wrong, but truth is, the best thing I could do is make sure I'm ready for the market. I don't want to time the market. I want to be ready for whatever the market brings at me. So one of the reasons my long-term portfolio is heavily diversified is because I don't want to worry about too much volatility, too much negative volatility. Second, I really do enjoy, I don't want to risk my entire portfolio, right? I'm pretty sure if I swing traded my entire portfolio, I would ultimately be okay. But I don't want to take that risk. You know what I mean? I think that only swing trading 30% of it and just concentrating it down to 5 ETFs is really smart. Give me a second here. So I want to kind of go over some of the other long-term holdings that I have, and these are all companies and these are all ETFs and individual stocks that I refuse to touch. I bought them, but I don't plan on ever selling them. Is really what I'm trying to get at. I bought them so I can never sell them. And each of these pays a dividend, by the way. If you notice, Best Buy pays a dividend. They actually pay, by the way, Best Buy pays a 6.23% yield, mainly because their stock price has been shot to hell. I mean, Best Buy's stock price since 2021, it was all the way up to $117.50. That's crazy. But yeah, no, I bought Best Buy on the dip. I think Best Buy is actually a decent investment. I'm not gonna like encourage people to buy it, but I am gonna say this: Best Buy is pretty solid. Okay. And I know that it's you stopping me from falling, crashing down, losing ground, till I see you again. And I know. So, Annie just asked a really good question. How do you know which ETFs to invest in? I'm going to my bank and talk to a financial advisor. Oh, okay, cool. So how do you know which ETFs to invest in? To be honest, it depends on you, the person, Annie. It depends on a few things. Are you does let me ask a few questions because it depends on the individual always. Do you like taking risks with your money? If you don't like taking risks, make sure you're diversified straight up. To those who really are who are very risk averse, remain as diversified as you can, right? And by the way, I'm fairly risk averse myself, especially when it comes to my equities. So one of the reasons I'm very diversified is because one, my whole goal is to preserve my wealth and also make sure that my portfolio is an income producer. I don't see my portfolio. I see my portfolio as a very active part of my life more than anything. My portfolio is a very active part of my life. But as far as it goes, how do you know which ETFs to invest in? Well, Annie, ask me this question because, answer me this question. Okay, you like a little bit of risk. Okay, that helps. And this is a tough question to ask because I know what I'm into when it comes to ETFs, but I don't know what you would be into. So, would you be okay with investing in international companies, for example? Would you be okay with having U.S. companies, international companies, both? How diversified do you want to be? How spread out do you want your risk to be? Because you can have exposure to international companies. You can have exposure to U.S. companies. In fact, if you want to invest in the entire globe, one thing that my boy Strongman Personal Finance recommends, and I'm just going to say this right now, this is not a recommendation of the channel, Vanguard equals VT equals Vanguard Total World Index. This is a good ETF to start out with. Not financial advice. Oh, I keep forgetting that Annie is located in Canada. I always seem to forget that Annie's located in Canada. Crap. Let me rethink that, Annie, because you're located in Canada. So Annie, are you allowed to invest in things that are outside of Canada? Like, are you allowed to like invest in Vanguard ETFs or anything? Like, so I would say so if you're allowed to, I would say the Vanguard Total World Index is a good starting point, because it allows you to be diversified very quickly. And diversification early, I think, is a very good thing, and I think it's underrated. That way, because with the Vanguard Total World Index, 60% of it is international stocks. It's the total international stock market, basically. And then, no, hold on, sorry. 40% of it is international, 60% of it's U.S. So 60% is the total U.S. stock market, and then 40% of it is the international stock market. Okay, so I would say if you're gonna start out with, if this is your first time investing and you want to get into investing, I can't recommend it legally, but I can say this, that if I was to start investing all over again, if I started from square one and I had $1,000 or $100 or $200 in my brokerage account, I would start out with the VT, the Vanguard Total World Index, because one, by buying into the Vanguard Total World Index, I just gave myself diversification. I allowed myself to be diversified. I am now a fully diversified man. With Vanguard Total World Index, I'm going to explain what it is. So it holds, last time I checked, I think it holds up to 10,000 different companies, if I remember right. Hold on. So the VT, this is the Vanguard Total World. Yes, okay. So the Vanguard Total World Index, it holds up to 10,142 holdings. So it contains 10,142 individual companies within it. So now currently it is at $155.90 per share. It's a little spendy per share, but I would still talk to a financial advisor and see if getting diversified early would be the best thing for you to do. And if you want to be diversified across the globe, VT is my favorite. It really is. I mean, if you want to be exposed to everything, if you want to be exposed to every single equity out there, Vanguard Total World ETF is my favorite. It is my favorite one. I love it. Does that make sense overall, Annie? If it doesn't, let me know. I would say if I had to start over again from scratch, VT, Vanguard Total World Index, would be my first ETF purchase. And honestly, you could have your portfolio contain VT, and that's all. If you really wanted to, if you wanted to have a very safe portfolio of equities, I mean, honestly, you could just have Vanguard Total World Index, and that would be okay. I mean, it really is an all-in-one ETF. However, if you want to expose yourself to other companies, to other ETFs, you're more than welcome to. For example, if you want exposure to silver and gold, you could buy silver and gold ETFs. But yeah, just remember, talk to a financial advisor, because legally I can't give advice. I can only speak from my experience. I can only let you know what I would do, but I'm not saying it is what you should do. I want to make that clear to everybody who's watching. None of this, and I mean none of this, is financial advice. This is just what I do personally. These are my philosophies. And to be honest, that's why I always encourage people to talk to a financial advisor. No, I mean that. I mean, it's really what I, but Annie says, okay, I'll do that. Makes sense. Garza, I'm following. But yeah, And by the way, I mean, like, diversification is really important. I cannot emphasize how important diversification is, especially across all asset classes. So, if I were to start all over again, Annie, I would have VT. I would have VT, IAU, SLV, VNQ. These are ticker symbols, by the way. These are the ticker symbols for the ETFs that I would have in my portfolio. If I had to start all over again and create a long-term portfolio, this is what I would actually do. Give me 1 second. There's one more I want to add to this. BND, BNDX. So if I had to do it all over again, I would have VT, IAU, SLV, VNQ, BND, BNDX, not financial advice. Educational, entertainment purposes only. Yeah, no problem, Annie. And I'm sorry if I over-explained all this. I tend to have a habit of over-explaining things. But yeah, so here's the thing. When it comes to allocation, though, I would probably have a lot of it allocated to the VT. Mainly because equities are growing. Equities are productive assets, and the difference between a productive asset and a non-productive asset is very simple. I'll give you an example. Gold and silver, while they do appreciate and they are inflation proof, they are technically a non-productive asset when they're being held. Real estate can either be a productive asset or a non-productive asset. Now, real estate is a non-productive asset when you buy the real estate and you do nothing with it, right? It's non-productive, but it does appreciate over time, even if you do nothing with it. Now, when does real estate become a productive asset? Well, real estate becomes a productive asset when you're leasing it out to somebody, right? So let's say you have a piece of real estate and you decide to rent it out to a person or a company or whatever, right? That's when real estate becomes a productive asset. Now, what are productive assets by default? Productive assets are basically assets that do something. Real estate that's being leased out is an asset that's actually doing something, right? If I invest in Coca-Cola, Coca-Cola is an asset that is producing something. It's doing something, right? So productive assets are really important. That's why I love stocks so much. I'm not a big fan of bonds because bonds are technically not productive assets. So keep in mind that bonds are not productive and they're not inflation proof unless you get like the tips ones, which I'm still not a fan of the tips either, but you can get into that if you want to talk to a financial advisor about all this. But no, productive assets really do matter. ET, that's a pretty funny one. I like that one. But yeah, no, productive assets are a big deal. They give you such a huge advantage overall. And yeah, I love it. So yeah, does anybody have any additional questions though? Annie, do you have any additional questions? Does anybody in the chat have additional questions too? Any thoughts? Anything at all? I will say this: if you are just starting investing, starting in the world of investing, it is a good idea to construct a long-term portfolio of ETFs. And if you want, you can venture outside. Well, now I was going to say this. It is a good idea to construct a long-term portfolio of ETFs that you intend on holding for a I don't know. But yeah, one of the reasons why I have a long-term portfolio is because I get dividends. I get dividends from those positions. A lot of the ETFs that I have give me a pretty good dividend. A lot of the individual stocks that I have give me a good dividend. It's all about dividends for me. If I get decent dividends, I'm a very happy man. I'm a very happy camper at that point. Yeah, I'm a dividend freak, man. I'm all about the dividends. It's how I construct my portfolio. It's how I do my business, dude. My business. It's how I do my thing. But yeah, no, swing trading is a very entertaining thing to do. I'm a huge fan of swing trading. I keep doing it because it's just, like I said, it's just what I'm into. But like I said, 70% of my portfolio is strictly long-term holdings. I don't intend on selling any of my assets in that 70% part of my portfolio. The 30% part of my portfolio is very liquid. I'm in and I'm out. I'm in and I'm out. I'm in and I'm out. Oh, I'm in and I'm out. I'm in and I'm out. I'm in and I'm out. Oh. Okay, cool. But yeah, like I said, talk to a financial advisor. Remember, not financial advice, for educational and entertainment purposes only. I cannot emphasize that enough. I'm just speaking from my own experience. None of these ETFs are endorsements. I don't endorse any of these. I love these ETFs, but I do not endorse any of them. They don't endorse me. I don't endorse them. It's enough of that. But I really do enjoy swing trading quite a bit. I love it, man. Give me just a moment, you guys. Sorry, I'm looking at my long-term holdings real quick. Oh, Biddy my titty is going up. Oh, hell yeah, bro. Biddy. Oh, Biddy my titty. Oh my god. Oh my god. Oh my god. Oh my god. Yeah, anytime Biddy goes up, dude, my nipples get hard. When I think about playoffs, my nipples get hard. Now, class, now that we went over the whiteboard stuff, let's look up swing trading by the dip. Let's react to a couple things. Now, this guy's saying how to buy the dip the right way. Now, this guy is saying killer dip buy strategy for swing trading explained in 2 minutes. Let's take a listen.
Previous dip buy video and
Hey, we can learn anything in 2 minutes, man.
in swing trading channel in Discord, I alerted to buy PFE at $41 area, mentioning it's a good dip buy opportunity. And there's a good chance of a bounce. And I couldn't be right enough, and the stock bounced exactly where
Wait, is PFE? I think that's Pfizer, isn't it? PFE's Pfizer. Hold on, PFE stock. Yeah, it's Pfizer. So here's the thing: I don't like to swing trade individual stocks. That's one thing. I don't like to swing trade individual stocks. That's just not my MO. It's not something I'm all about, though. Swing trading individual stocks pisses me off, dude.
said it would, and it never looked
I think
back.
it's a bad call.
I alerted a similar setup in LI Motors, and the stock went up on a rally of 100%. Now it's time for me to ask you for money so I could tell you how to do it yourself. My PayPal link is in the description below. Just kidding. In this video, I will explain step by step in a very beginner friendly way on what I look for to find these perfect dip buy setups. In my 4 years of trading career and working with lots of traders, I believe this is by far one of the easiest and most rewarding strategies that gives good risk to reward. So let's get started. Step 1. I always use the daily chart to find potential dip buy zones. In daily chart, each candle represents one whole day of trading activity. Hence, it's called the daily chart. I like to have at least 1 year of data in my chart. A little more is okay. Step 2. In daily chart, I scan for areas with increasing volume bars. But most importantly, I scan for areas where stock price started to have a massive increase in share price in short period of time. From there, I go down and see where it all started from. The area where it started from is called a breakout area. This shows me where the demand of stock is, and if the stock comes back down to the same area, it has a very high chance of a bounce again. Once I identify that area, I draw my support line and wait for the price to come back down. I wait for the price to come back down to the same area. And that's how I was able to buy at the exact bottom and get the best price possible.
See, here's how I would do it. So I don't wait. I usually, if it starts going down, I trickle buy. So if it's like right here, and it's right here, I trickle buy here, 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 and then boom, it goes back up. Because I think timing the bottom is nearly impossible. I really believe that. There are some people who may have a formula to time the bottom of anything, but I think that's a little too risky, even for me. I still think that's a little too risky. I mean that.
Now, keep in mind, not 100% of the time the stock will bounce from where you think it will. To combat that, make sure you also have an exit strategy, also known as risk management. In my experience, this works 7 out of 10 times, so it's your job to cut loss quickly in those 30% of the instances when you are wrong.
See, this is one of the reasons why I don't like swing trading individual stocks, because I don't like setting up stop losses. I really don't. I'm not a fan. I don't like setting them up. This is one of the reasons why I keep a lot of cash on standby in my swing trading strategy, because I don't want to set up stop losses, dude. Why would anybody want to set up a stop loss? I think it's annoying. I hate setting them up. I don't even like thinking about stop losses. I like having enough cash, and I like to trickle buy on the dip. I don't know when the bottom's going to happen, but I trickle buy on the dip, and one of the reasons why I trickle buy the dip on small cap ETFs, for example, is because 1, they're heavily diversified. 2, it's not going to go down forever. At least in theory, it shouldn't. 3, I don't like setting up stop losses. Stop losses piss me off, dude. I get so pissed every time I have to set up a stop loss. I don't do it. I don't do stop losses. I think it's stupid. But yeah, no. When something like this goes down, like if this was a small cap ETF, And it's going down, down, down. I trickle buy, trickle buy, trickle buy, trickle buy. Oop, it's going up. Trickle sell, trickle sell, trickle sell. That's how I would do
the
it.
price just simply doesn't bounce. Now, to get better at spotting these key levels and have a better win rate, I suggest you go through the daily charts of all the famous stocks that you know of and look for these key areas that it just talked about and write down where you could have entered and how you could have played.
Yeah, I don't like doing it with individual stocks though. I feel like it's too risky to do it with even with reputable companies. I think it's too risky to swing trade and dip buy even on very reputable companies. You just don't know what direction anything's going to go. It's crazy. Oh, killer dip buying strategies from a six-figure trader. Let's take a listen.
I'm looking for extreme panic.
That's true. Honestly, whenever there is panic in the streets, what I mean by that is when there's massive sell-offs in the market, especially in the small cap markets, I love buying the dip on small cap ETFs. The VTWO, the VSS. Those are the two that I love buying the dip on because anytime they dip, I love to rip. All right? When they dip, I rip, dude. When you dip, I rip. But yeah, that's pretty much how I proceed, man. That's how I do it. Yeah, I love it when Bitcoin goes down, though. Anytime Bitcoin crashes, I mean, that's like the best time for me because you know me, I don't believe in Bitcoin in the slightest. I think Bitcoin's a Ponzi. And also, I just don't trust Bitcoin for the life of me. So it's one of those things. Let's keep rolling, man. Let's get to it.
Another question, just to elaborate a little bit, dip buy. People hear that term a lot, and so
yeah, it's overused.
It does matter what you're... Okay, so anytime... Not all dips are created equal. If you're buying the dip on Bitcoin, there is a possibility that Bitcoin can go to zero because of its lack of intrinsic value. If you're buying the dip on an ETF that holds a bunch of stocks within it, that's good because there's intrinsic value there. There's actual valuable companies that actually do something. So buying the dip on an index is actually, in my opinion, a high-level move. And, yeah, that's the way I see it, at least. Yeah. So anytime you're buying the dip on anything, if you're going to buy the dip, make sure that what you're buying into is actually valuable and actually does something. You know what I mean? And if it doesn't do anything, make sure it has intrinsic usefulness. Make sure it's useful to some degree.
Yeah. So what is it to you? Break down a dip buy to you. What leads up to it, and then what you're looking at for entry.
Right. So I'm looking for extreme panic.
Yep.
Right, because a lot of people might say dip buy, and it's because the stock
I
went
always
down.
love when people are like, some stock's down like 2%.
Right.
Should I dip buy this? I'm like, yes, it's red on the day, but this is not a dip buy. That's not the point.
And so,
I mean, I like I said, I trickle buy. So if it's down 2%, I'll buy like one share. And if it goes down 2% the next day, I'll buy another share of that sort of thing, of whatever ETF is down. So anyway, let's keep going. I'm curious about what they're saying.
yeah, so I looked at, I want ideally 20% or more.
Yep.
If it can go 30, 40, even the better.
And
Okay, here's the thing, though. That's unrealistic. And by the way, if anything dips 30 or 40 or 50%, you want to stay away from that. That's stupid. See, that's too risky for me. The sort of shit that he's talking about, that's way too risky. I want volatility, but I don't want that kind of volatility. I want maybe 5, 6, 7% down. Even 3 or 4% down is reasonable to me. I will say silver is super volatile, and it could go down 10% in a day. So I am aware of that risk, but I really do enjoy buying the dip on silver, though. I love buying the dip on silver.
Morning.
But it
But I don't
in the afternoon.
I hate buying the dip on penny stocks though, because there's a chance that company's shit and it's going bankrupt.
But your odds of success are just far better in the morning. So if it, even, and it's happened before where I'll have FOMO, it only drops 10%, and I'm thinking, oh, I should dip buy, and I kind of hold back. I'm like, no, wait, and I end up saving myself a loss. So I love 20% or more, and I need to see, like, unfortunately, longs in pain. I need to see red candle, and just keep it going. And then you watch that level 2. You learn to watch level 2 through practice, and you see the bid firming, and then you get long, and then that's when that bounce comes.
And then basically you're looking.
None of this is financial advice, by the way.
For that bid to firm up, you're looking for that perk. You're buying into that, and then your stop is just a fail. Once it breaks that previous low, that's your stop.
Right.
So
exactly.
And again, back to. That's the number one takeaway with these things, because these stocks, these guys look to dip buy. I mean, they're up hundreds, thousands of %. And if you dip buy at down 50% or 60%, it can still go lower. I mean, these things can go lower. That's
why I don't fuck with penny stocks. I stay away from penny stocks because they could go even further. If a penny stock's going down 20% in a day, what is stopping it from going even further down? You know what I mean? So my goal is to protect myself through diversification, which is one of the reasons why I get into small cap ETFs specifically for swing trading. They're just volatile enough for me to make a quick buck. I could buy the dip on a small cap and then be able to reap the benefits of the upswing when things go back to normal, right? Small caps are very sensitive, by the way, to geopolitical things. So anytime there's negative news, anytime the markets crash, man, small caps get hit hardest. And honestly, whenever small caps get hit the hardest, that is my favorite time to get in. Straight up. Like, I love it. But yeah, I'm always, I love small cap ETFs. They're like my favorite to swing trade. Yeah, let's see here. Give me one moment, folks. I'm checking something here. Yeah, my portfolio is freaking up for the day, man. It's looking good. I mean, my portfolio is heavily diversified, so it doesn't really matter.
So you have to have that discipline because sometimes they'll firm up, they'll perk, and then they'll slam again. So you gotta.
Annie is saying, I never thought about stocks till I started watching your channel. It's shocking how I find this interesting things. Yeah, I try to make it interesting. I try to make it entertaining because I will admit, learning about equities, aka stocks, can be very boring and tedious, but I do try to make it entertaining in a way. But I like to let people know that you don't have to be some guy in a suit to trade in stocks. Everybody thinks you got to be like some dude on Wall Street or you have to have thousands of dollars. No, you only need like $20 these days. It's not hard to invest. I mean, you could open up a brokerage account at any time. There's plenty of opportunities out there. And, I like to encourage people to invest as much as they can. I think it's a good thing to invest. I think investing's great. I think it's more important than finding a job, even though, by the way, I think it's important to work a job. if you have unless you have something going on, then like I run my own businesses basically, so I don't have to work a traditional job, which is nice, which is very relaxing. But yeah, I swing trade stocks pretty much for a living at this point, and I do YouTube for a living almost. I still have to compensate a little bit though, by like delivery driving and stuff like that. Delivery driving does compensate for any lack of income.
But keep that stop at that previous low because
Absolutely.
Because what's great about the dip buy, it's a self-fulfilling prophecy. A lot of traders look for this. So what you need to remember if you're looking to experiment with this, if everybody's dipping on that perk,
Yep.
and then everybody uses this strategy, once that low takes out, everybody's out. So you can't stay.
No.
Because now you're the bag holder because everybody else.
Here's the thing. If you guys are starting out in investing, I don't recommend swing trading until you have a comfortable long-term portfolio. And when you have a comfortable long-term portfolio that's heavily diversified, then you could branch out, right? You could have speculative holdings. You could swing trade part of your portfolio. You could buy ETFs specifically that are used for swing trading purposes. There are plenty of things you could do. So you don't have to feel trapped in one specific line of thinking when it comes to swing trading. So if you're just starting out, I would recommend focusing on constructing a long-term portfolio. Actually, I can't recommend that. I'll tell you what. If I had to start all over again, if I had to become an investor again, and I just started out, I would construct a long-term portfolio first. I would diversify early by getting into the VT. I would get into mainly the VT is what I would get into, just if I was just starting out, so I could make sure that I'm heavily diversified. And then once I have most of my holdings figured out, I'm going to dollar cost average into those holdings for the most part. I'm going to take the dividends and reinvest them into my long-term holdings. But then once I have a long-term portfolio established, I'm going to probably expand my horizons. I'm going to swing trade because I already have a long-term portfolio established. And remember, your long-term portfolio should never be touched. Never, ever sell your long-term portfolio. The reason it's a long-term portfolio is because it's meant to be there for a long time. It's not meant to be touched. It's meant to sit. You meant to buy. You meant to hold it. You're meant to let it sit to the side and do its thing. You're supposed to let that part of the portfolio do its thing. They're productive assets. They will succeed. All you have to do is hold on to them and never sell them. Now, on the other side of your portfolio, you could buy ETFs that you know that you are going to use for swing trading purposes. You'll buy these ETFs specifically for the purpose of swing trading. So if you're just starting out, please try to construct a long-term portfolio. I beg you. Talk to a financial advisor. I'm pretty sure they'll agree with me on this. Construct a long-term portfolio first, please. Make sure you get into. I think it's great to get into ETFs early, as long as they're index ETFs specifically, okay? Examples of index ETFs, the VT. Mainly the VT. But if you're looking to expand into other asset classes, SLV, IAU, those are silver and gold ETFs, FYI. VT. Like I said, that basically the VT allows you to be exposed to not only the entire U.S. market, but allows you to be exposed to the entire international market as well. So that's why the VT is so important. That's why I said if I was to start all over again and I had one ETF that I could buy, it would be the VT. It would be the Vanguard Total World Index. If there was only one ETF I could buy, that would be it. Because one, it exposes me to everything. And two, I mean, that's indexing to the max. The VT is basically the ultimate equities ETF, in my opinion. It is the most diversified, as far as I know, the most diversified ETF in existence when it comes to the equities markets. And I think that's very important to keep in mind. Uh-oh, random player. What's random player doing?
Said, well, this dip buy didn't work, because they don't all work, remember? So everybody's gone, and it ain't coming back after that.
I love that you said that, because I don't want to make you guys think that I learned dip buying, and all of a sudden, I'm perfect. Like, it took months of unfortunately that scenario where I dip bought something that maybe wasn't the best, and unfortunately it broke that low, and now I'm unfortunate. And if you're learning it, definitely start with small stacks, because unfortunately you get caught. Unfortunately, just from learning experience, you're going to get caught in one of those situations where you're going to have to sell low day, and if you are with all the other longs, there's going to be some slippage. You have to.
And this is why I don't. What he's saying, I think, is bullshit. I think it is stupid. I think it's irresponsible to buy the dip on an individual small cap stock. For example, I think it's extremely irresponsible to buy, I don't know, let's just say whatever penny stock is out there. This is why I dip buy small cap ETFs, and then I sell on the incline. You want to know why? Think about it. Do you guys remember my equation? Diversification's a part of the equation. I want to make sure that whatever I'm getting into is heavily diversified. This is why I only swing trade ETFs. I don't swing trade individual stocks, because if I swing trade an individual stock, it lacks diversification. There's no guarantee. While it does have intrinsic value, there's also the possibility that it could go bankrupt if it's a really, really shitty company. Small cap companies carry a lot of risk, which is one of the reasons why I swing trade small cap indexes, because the diversification is the security blanket in that ETF itself. Hey, no problem, Annie. Look, I'm trying to give all you guys a place to start. I know there's a lot of people who hear me talk about investing on this channel a lot, but I know there's also a lot of people who have become very interested in learning how to invest, at least to have some sort of framework to start. And like I always say, talk to a financial advisor. None of this is financial advice, you guys. Keep that in mind. This is always something to keep in mind. I try to be responsible with that, but I want to encourage people to be diversified early. I say the earlier you diversify, the better. It's good to have exposure to all sorts of different asset classes, and you'll be pretty much golden at the end of the day. Now, you guys are probably wondering, why don't I just own the VT and that's it? Because honestly, I like seeing dividends come into my portfolio every day, so I basically own a crap ton of dividend stocks. I also just love seeing dividends come at different time frames during the quarter. So I own one share of just about every single index ETF that I could think of that's reputable. But yeah, I own a bunch of individual stocks. I own a bunch of ETFs that are index-based primarily. I do own some covered call ETFs in my long-term portfolio, but it's kind of like a slight income sleeve to my portfolio as well. I own BDCs, which give me actually some pretty good... BDCs actually give me really good income. I will say this about BDCs, that make me very happy. I love the income I get from those. Like, people don't realize that BDCs, while they are risky to some degree because they're loaning out to smaller they're loaning out money to small and mid cap size companies, so they are very risky. Let me see.
To admit that,
Yeah.
so.
Which just for definition, just for newer traders out there, these stocks, just because you want to sell here doesn't mean you'll get filled here, okay? You may get filled down here or down here. So especially as you're experimenting this, you want to use that smaller size, because if you get filled 10% lower or 20% lower than you wanted, you want to make sure you're testing with small size so that you don't get wrecked.
Yep, absolutely.
And now what I love about the setup, and I'm not much of a dip buy guy, it's just never really worked for me, but what I love,
The problem, here's the thing, these guys are dip buying small cap companies, individual companies. You have to dip buy the index. You know what I mean? Dip buying the index, and I'm not saying you have to, it's not a requirement. I'm just saying if you dip buy an individual stock, you're taking a really huge risk if it's a small cap. I will say this though, if you're dip buying a company like Coca-Cola or Realty Income, there's less risk because they're well-established companies. When you're dip buying a small cap company, when you are dip buying a very small one, I mean, you're taking a major, major risk. Keep that in mind. And the risk that you're really taking is that because these companies aren't established, they haven't proven profitability. You can measure their book value, but you're also measuring the fact that are they going to be good in the future? Is this company going to be good in the future, or is it going to be shit in the future? With a company like Coca-Cola and Realty Income, these companies have at least proven that they're profitable. They are profitable. They don't need to borrow money to survive. Small cap companies traditionally do. Small cap companies are very risky, by the way. There could be high reward, don't get me wrong. But you got to think of small cap companies a lot of the time like a lottery ticket, which is why if you're going to buy the dip on small cap, make sure that you're buying the dip on a small cap index instead of a small cap individual stock. It's only one single company that you're buying the dip on. That's bad. Diversification matters because it's a security blanket. If you're going to dip buy anything, dip buy an index ETF. That's my philosophy. It's so funny. I am such a pussy, by the way. I don't even like to buy, as much as I love Coca-Cola, by the way. I could swing trade Coca-Cola. I could. Even though Coca-Cola has a wide product pipeline and Coca-Cola will probably not go anywhere for a long, long time, I'm paranoid. I am paranoid on buying the dip on any individual stock, even if I trust that stock, even if I trust that company completely. Random players wondering where's all the stupid Democrat bot farmers today? Well, probably because we're talking about swing trading, you know what I mean? Since we're talking about swing trading strategies, we're not actually talking about anything political. It's pretty much, I think, just a lot of my subscribers are on here. And the reason, you guys are probably wondering, why am I doing a stream about swing trading instead of political stuff? Well, one, I'm tired of talking politics. Two, people do enjoy learning about swing trading for the most part and learning about investing principles. But I will say, I really do enjoy reacting to these types of videos right here because I could point out what they're doing that is stupid, in my opinion. And I could point out what doesn't work for most people. My strategy is not difficult. My strategy is pretty damn simple. Buy the dip of any sort of, index, you're pretty much golden, as long as it's a diversified index and not too low. Hey, baby.
Those aren't my Toastums, are they?
No, those are mine. Those are mine. I didn't steal your Toastums, baby. Trust me. No, actually, those are Toastums I bought the other day when I went to the Dollar Tree. I know that if I stole your Toastums, though, you'd be at war. No, I wouldn't. If I did steal your Toastums, though, I would buy more Toastums for you. I would replenish. I love you, baby. I'm going to be done here in just a second, though. I'm just reacting to one video here.
About it is it offers clear risk to reward because of that morning low. I like, for lack of a better term, I love stops that are just like calling you an idiot if you don't.
So Annie's asking the question, let's see, so I shouldn't invest in Pepsi. So here's the thing. I'm not saying that you shouldn't have individual stocks in your portfolio. I'm saying that if you're going to swing trade, I think it's best to swing trade an ETF specifically. Because when you swing trade an ETF specifically, you're swing trading a diversified product, right? Because these ETFs hold all these various companies. So when I'm swing trading a small cap ETF, I'm swing trading an entire index price, right? Now, if I'll give you an example, like my long-term holdings, I have Coca-Cola, I have Pepsi, I have Intel, I have Realty Income, I have all these individual stocks in my portfolio. I'm not saying that you shouldn't have them. I am saying that you shouldn't swing trade them. Does that make sense? Like, you just shouldn't swing trade. I think it's a bad idea to swing it. Sorry. I think it's a bad thing to. I think it's stupid to swing trade individual stocks. But if you are going to swing trade individual stocks, I think it's best to swing trade stocks that are well established and have proven themselves and have real product pipelines and are really profitable. Coca-Cola is extremely profitable. Pepsi, extremely profitable. I think it's a bad idea to swing trade individual stocks. I only swing trade ETFs. That's my preference. What these guys are talking about swing trading penny stocks, basically. And I think swing trading individual penny stocks is stupid. Swing trading a penny stock index that's heavily diversified is smart, because the goal is to mitigate the risk. If you can mitigate the risk through an index, that's smart in my opinion. So, by the way, have as many individual stocks as you want, Annie. You can have as many individual stocks as you choose. Actually, Bitcoin's dipping even further. Let me see if I can profit off of its downfall a little bit. Oh yeah, I've been profiting off of Bitcoin's downfall today like crazy. Anytime Bitcoin goes down, man, I'm always excited to profit using the biddy. Yeah, I realized I made a lot of profit today in general. This is nice. It's so funny. Intel and Cisco, man, their stock prices have gone up so crazy because of their because one, Cisco has become an AI player, and so has Intel. Intel's been a part of the AI space as well. Vanguard. Let's see Vanguard real estate index. That's a good one. But yeah, no, I own a lot of individual stocks too. For example, like I said, I own Coca-Cola. I own at least one share of Coca-Cola. I own Altria Group. They're more of a tobacco company for the most part. I own Realty Income. These are all individual stocks that I own for the long term, but I don't swing trade them. I could swing trade them, but I choose not to. Mainly because if I'm going to swing trade anything, it's got to be a diversified product, with the exception of gold and silver ETFs. Those are the only exceptions. Yeah, like I got Best Buy. I got one share of Best Buy. I plan on holding that for the long term because their dividend yield is really high right now. I got VC Properties, which they're a real estate investment trust. They own, acquire, and develop gaming, hospitality, and entertainment properties, that sort of thing. Yeah, so I own a lot of individual REITs. I own a lot of dividend. My individual stock portfolio is primarily dividend-paying stocks, like Coca-Cola, like AT&T, like Verizon, like Community Health Properties. I even have Pfizer. I was able to get Pfizer at a really low price. Honestly, Pfizer's been doing pretty rough over the last 5 years. Let's see. They went up quite a bit at one point, but I mean, Pfizer is still a huge company, and I think it's smart to own shares of Pfizer. As far as how far will I buy the dip, I don't know. I mean, they're a long-term holding of mine, mainly because, like I said, they pay a really good dividend. And I know, I still think Pfizer's doing some good for the world, for the most part. They're coming up with cures. They're coming up with new things to make the world a better place. So Pfizer's not bad. By the way, I'm not recommending any individual stocks. I want to make that very clear. None of this is financial advice. These are just what I got in my portfolio and just for entertainment, educational purposes only. So, but yeah, these are, for example, you can have individual stocks in your portfolio. I'm just saying that if you're going to have individual stocks, make sure that you have good ones. Make sure these are actually good companies and not like speculative penny stocks. Say no to penny stocks. As far as long-term holdings are concerned, though, make sure they're safe for the most part. Really good, established, well-established companies, that sort of thing. But yeah, other than that, it's pretty simple, man. But I do want to say that I think it's good to get into ETFs early. ETFs are probably your best bet because exchange-traded funds really matter. Exchange-traded funds allow you to be diversified early and allow you to get exposure to a lot of different companies without having to buy a share of each of those companies that you want to get exposure to. So that's one thing I could say. But yeah, there's plenty of ways to get exposure to amazing companies, man.
Won't take them.
Right.
I mean, you've been there. It's your style. I mean, if that thing perks, you're in, and then it breaks that low. First thing you say to yourself is, "Get out,
Yeah,
moron!"
it's not working.
This is done. It's over.
Yep.
And that's what's great for newer traders. Is it's like, to me, it's crystal clear.
Yeah.
Now it takes experience, but when it breaks that morning low, and this is some stock that's gone from 2 cents to 250 or something, that, I mean, it can keep going, and normally they keep going lower for days. So it's like, with the experience, I gotta stop out here.
Right.
So
yeah, it gives you a clear plan.
Yep,
That's
yep.
it. It's over. Yep.
Thanks for watching our video.
But yeah, here's the thing. I am not a fan of, like I said, these guys are swing trading penny stocks, for God's sakes, and they're buying the dip on a penny stock. It's like I can understand if you want to buy the dip on a small cap, on like a penny stock ETF, for example, because you have the power of diversification there. But what I don't understand is, why would you buy the dip on one individual company? Even if you think that company is going to eventually go up, it's a big risk. It's a huge risk. And like, if you want to have some penny stocks in your portfolio, that's fine. But I will tell you this: be aware that those positions could go to zero at any time. Just saying. But I do want to thank you guys for taking the time to view this specific video. I do got to go. I will probably stream. I don't know if I'm going to be streaming tomorrow at any point. We'll see. We'll see what I'll be doing. If I do stream tomorrow, it'll probably be at night. So that's something to keep in mind. Yeah. Other than that, though, I want to thank you guys for being a part of the show. You guys make every show entertaining, and I'll catch you guys later.